you mentioned PSUs just a while back. We were discussing NTPC. And I know that Nimesh worked a lot of numbers over the week because I guess that's one of the biggest questions, the big debate, whether the best of the PSU party is done and dusted or whether this is just a pause. What do you say,
Surabhi, as a lot of people have said, the leader of this bull market has been PSUs, right? And we've seen some cracks now happening in the last 3 months. The index is down 10%. Let me just go to the wall and explain what it means and what to look forward to as far as the PSUs is concerned. So I'm putting the spotlight on PSUs largely because we've seen a big crack in the last 3 months in the PSC index. The index is down 10% in the since the recent highs. Index down 10%. Individual stocks in the PSU basket are down between 20 to 40%, and PSC index has lost nearly 4 lakh crores of market caps. That's a kind of correction we've seen in the PSU stocks in the last 1 quarter or so. Look at the big, these are the 3 reasons why you've seen a bit of correction in the PSU stocks. First being, there was over-exuberance and expensive valuations across the PSU basket. The second reason was over-ownership. We saw a lot of retail participations into the PSU stocks. And third, normally we've seen the launch of the thematic funds lead to a bit of a peak for that particular sector. These are the 3 reasons why we've seen a bit of correction in the PSU stocks. Now, look at the performance of the PSU stocks. Big cuts in the stocks like Cochin Shipyard, Garden Reach, BEML, Mazgaon Dock, Midani. HAL is down 26%, so is BEL. Of course, we need to put into context that these stocks have done phenomenally well over the last 3-4 years, and now we are seeing first signs of correction or a bit of pause in these companies. So these are the big losers. I've just taken more than 20% cuts. But within the PSU basket, there have been some winners as well in the recent months. HPCL is still in the green. NTPC is still flat to green. And stocks which are down less than 10%, Oil India, BPCL, Power Grid, IOC, they have not fallen much. And the key reason for this is the valuation has been a comfort for this particular basket, which has not done or fallen much in the last few months. So that's the kind of PSU basket. Now, as I said, the launch of thematic funds lead to a bit of a peak in the PSU stocks. We saw 3 defense funds in the last many months, and look at the performance of all the defense funds of late. HDFC Defense Fund is down 12%. Motilal Oswal Defense Funds is down 20% since the launch, and Aditya Birla Defense Funds is also down 5% in the last few months. So that's the kind of stocks which have done in the defense thing. But now the big question is the rally over for the PSUs? I spoke to 3 different sets of investors, and here's the first feedback. The first feedback is from a leading fund manager who had a big exposure in the PSU stocks. He believes that PSU as a theme is a decadal theme. He believes that value is going to outperform growth in this decade, and hence he's of the opinion that the bull market is not over in the PSU, but the easy phase of the bull run is largely over in the PSUs, and he believes from here on only quality PSUs which has got a unique business, they are likely to outperform. So that's a view from a fund manager. Second, I spoke to a veteran investor who's been a big bull of PSUs. Now, even he believes that typically, in the bull market, we see 30, 40, 50 kind of corrections in the bull market. So this is a typical bull market correction in the PSUs. However, the leadership is going to change according to him. And now there will be new sets of companies which will take the mental leadership in the PSU basket. There are few sectors and stocks where the valuations were unreasonable, and hence we are seeing a bit of correction in those names. I've also taken a technical view that this is coming in from Rahul Sharma of JM Financial. He believes that the PSE index is now trading at a very crucial support at a 200 DMA, and the risk reward from a long-term perspective is attractive. But in the near term, a lot of the over-exuberant stocks like defense, he feels that defense stocks need to be sold even if there is a bounce back. So it's going to be very, very selective in the PSU basket. We've seen a bit of a correction, but the key question is, and the feedback seems to be that the leadership of this PSU is likely to change. So we need to look for unique businesses within the PSUs which can do well. If I can ask you if you've been holding any of the PSU names, and in general, what's your sense on the PSU stocks? What kind of leadership can come within the PSU basket?
No, I think from our perspective, we are neutral, whether it's PSU or private.
Sure.
Company should be good, governance should be good, balance sheet should be good, and there should be growth. Sure. So, for example, we own BHEL.
Okay.
Bharat Heavy Limited, correct? Right. Because thermal is going to be there is a shortage, and BHEL will be the biggest beneficiary of it, right? And likewise, so I think be it a shipyard, be it a railway, or be it, I think all the themes are of course fantastic. Within that, we need to stick to the player who is a market leader and who has significant growth. And that's are the 2 most important things. We own one of the shipyard company as well. Of course, it is significantly in the money. So it's not a recommendation. Please put a disclaimer. But there are enough opportunities, be it a PSU, be it private. Look at from the growth perspective and the ROC perspective.
Sure. The other big thing is, now there is a sense that maybe time has come to shift to large caps from mid and small caps. Is that something that you've been taking in your portfolio as well? A bit of shift towards large cap names?
A bit of it, yes, you are right. More because of the valuation perspective.
Yeah, exactly, from a valuation point of view.
Yeah, but at the same time, let me tell you that, I was just running if you look at the entire small cap index, the median debt to equity ratio of small cap companies is 0.
Yeah.
Which was not the case in 2012.
True.
The ROC of small cap index is now 18%. Earlier it used to be 12%.
Right.
So the premium or discount versus Nifty, which it used to be 10 years back, is no more valid now. Correct? And as I'm saying, from the market cap perspective, top 100, large, next 150 mid, and everything else is small. But from the profit pool perspective, these 800 companies, which is making 100 crores plus profit, they all are actually large companies because there are only 800 companies.
Yeah.
So largest plywood company is called small cap. The largest logistic company with a 40% ROC is a small cap.
Right.
The second largest luggage company, one of our top holding, is a small cap. But these companies are not small. Correct? So we don't look at more as a market cap. We look at more as a profit size. Correct? And of course with their leadership characteristics. And of course the balance sheet. If you these three things right, chances that you'll not lose your money.
Rajesh, hearing you, it's a very different conversation from most of the ones that we've had in the last couple of days. We've discussed capital goods, we've discussed auto ancillary, manufacturing, high-end technology. The sense I get is that you're still, very keen to play the whole manufacturing, industrials, capex kind of a theme.
Absolutely.
Are you looking at any kind of portfolio shifts? Because otherwise the chatter has been all around, let's go back to banks, let's go to IT, it's time for consumer staples. So just your thoughts on the overall sense of portfolio churn that people are speaking of nowadays.
No, I think, capital goods will do well, no doubt about it. That remains a big structural theme over the next 3 years. Banking, everybody's hoping for, of course, we also own it. The valuations are in your favor. But the credit cost, we are at the bottom. We are the best of the credit cost. From here, probably the credit cost is going to go up. Yeah. And it is more linked to global thing as well. So within banking space, you need to have, for example, housing finance. What we own is more housing finance. They are doing extremely well. So they are not growing 12, 13%. They are growing 18, 20, 25%, correct? Likewise, in consumer, you will see some uptick because the rural is going to do well. So we own one of the largest FMCG company in last 1 month we added, correct? So we keep making this tactical shift, am I right? But if you ask me the broader themes, the structural stories, correct, will remain capital goods, few consumer discretionary, auto ancillary. There are few pockets in pharma because CDMO is going to take a U-turn now because that is impacted the most in US. Now CDMO research is going to start again. Right. So there are few companies which are going to do extremely well in the entire CDMO space. So that space is going to be interesting. So I think in every sector you need to identify such pockets.
Prashant, this really reminds me of your conversation with Chris Wood of Jefferies, right? He was making the exact same point that tactically he might add a little bit of financials here and there or some consumer. But he's steadfast going on capex and on real estate, right? Exactly what Rajesh is saying.
Absolutely. That's the thing, right? Near term, maybe people shift in and out. But I think as Rajesh is saying, if you're in it for the next 3-5 years, I think that's a theme which perhaps should do very, very well. Rajesh, great talking to you. Thank you very much for dropping by.
Thank you.
And hope to have you here more often on the table.
Sure. Thank you.
Thanks.
Well, I think it's a wrap on this edition of Editors Roundtable. From all of us here, it's goodbye. Thank you for staying with us. More news and updates on the other side.